Aranji. How are you?
Fine, sir. How are you, sir?
All good, all good. Thank you so much.
Thank you. One of the technology person and also from the group head of Paytm. We have Srinivas sir in our forum is a prestigious thing for us. Sir, welcome you, sir.
Thank you, Aranji.
So, with this, Mr. Srinivas is currently the group head, regulatory affairs and policy at 197 Communication Limited, the largest fintech payment company in India. Prior to this, he was heading the compliance department at the new development bank established by the BRICS countries, Brazil, Russia, India, China, and South Africa, and headquartered in the Shanghai. As part of this recent professional experience, Srinivas spearheaded the formulation and implementation of the sanctions, compliance, integrity, and anti-corruption, anti-money laundering, and code of conduct and ethics policy frameworks. Prior to that, he worked as a compliance professional both at the ICICI Bank and IDFC First Bank in Mumbai, focusing on various aspects of the banking regulation such as governance, risk management, prudential reporting, risk-based supervision, digital banking, and financial crime compliances. Srinivas is a member of the policy work group of the Digital Currency Global Initiative, a collaboration between the Stanford University and the International Telecommunication Union, a United Nations body based in Geneva. Further, as a visiting fellow at the University of Cambridge Institute for Sustainability Leadership, UK, Srinivas focused on researching the role of financial regulation in promoting sustainable infrastructure in BRICS cities. On the professional front, Srinivas is a qualified chartered accountant as well as a cost and management accountant with the national ranks in all academic examinations. A fellow member of International Compliance Association UK and certified anti-money laundering specialist USA. He holds the doctorate degree from the University of Manchester, UK, with a research interest spanning across topics relating to monetary policies, financial instability, regulatory reforms, and banking governance. Srinivas was the recipient of the CA Global Achiever Award for the year 2019 from the Institute of Chartered Accountants of India. He is a speaker and is associated with academic institute and programs dealing with fintech policies and regulation, such as the United Nations International Crime and Justice Research Institute, International Anti-Corruption Academy, Zigzag University International Business School, Nelson Mandela University, South Africa, and various law school in India. With this, actually with the vast experience and academic qualification, we have our speaker, Mr. Srinivas. Sir, the forum is ours.
Yeah. In fact, I think good evening, everyone. At the outset, good evening, and a bit delayed, but I think we are like not much delayed. Thank you, Aranji, for this wonderful introduction. I think that's a long introduction. Maybe somebody was chasing me to give a brief of my profile, and I think this was one of the oldest updates I have done. Okay. For the CA Institute, I think all I need to say is that I am a chartered accountant from Vijayawada, and I am like completed my CA from Vijayawada, and Hyderabad branch is like my home branch actually. So I started my career in Hyderabad 2001-2002 as a chartered accountant here, and Luckily Kapur branch, we had got office in premises. We had so many working sessions with Mr. Gilly sir, and it is a pleasure also to host some of the sessions in the Center of Excellence that we have in the Gachibowli. I'm glad that after these many years, 18 years of staying in Bombay and Shanghai thereafter, last 5 years, I'm back in Hyderabad, and I have been in fact very eager to meet up the community. Though there is always a bit of diversion in my career that has happened from pure accounting to a kind of a banking regulation and financial crime compliance that has become my core part of my career profile that has happened in the last few years. And with my entry into Shanghai for the last 5 years as part of the BRICS Bank compliance role, I had an opportunity to have a ringside view of how China has developed financial technology, fintech, and how the payments in China have actually transformed the way the country and the way the common people interact with the topic of money, payment, and settlement actually. So since the last 5 years, whenever I used to visit India, I used to interact with my colleagues in Bombay, with regulators, with the government, and I used to share some of the learnings from China, saying that the QR code payments are like the next thing. This is in the time like 2017, 2018. So first 2-3 years, I was like regularly visiting both Delhi and Bombay, meeting up people and explaining how China has done this success story. But come 2019, the way India has embarked upon the same QR code payment, and today what we call it as UPI, Unified Payment Interface. And the way today, I think in yesterday's announcement, most of you might have seen, the way we have integrated this UPI with international countries, starting with Singapore Pay now, is a remarkable achievement for a country like India, with the kind of what you call vintage. Like we had been into this digital payments only hardly from the last 4-5 years, but the amount of exponential growth that it has seen is a phenomenal what you call experience, and also a case study for the countries all over the world, and how we can transfer this kind of an expertise to the other countries also. But while there is an excitement in the banking circles, and there is also an what you call excitement in the venture capital circles, and also in you can say technology circles, about what is happening and how these things are shaping up the industry, and also the shaping up the geopolitical scenario also in some cases, and also central banks look out on regulation, on compliance, on audit. There is a lot of discussion and debate happening across different circles. One thing that has struck me is that not much of a debate is happening in this area from the chartered accountant fraternity. Our chartered accountant fraternity, whenever I see any kind of a program, brochures, or any kind of an event, what do you call details, if I glance through, I somehow see, while there is a lot of emphasis upon digital technology, all these things are like we're ahead of the curve. In fact, there are like a lot of these publications that are happening. But what is happening is that payments as a subject, I found that there is some more what do you call emphasis that is needed, starting from the chartered accountant at a student stage, like a final student stage. We need to be in a position to imbibe some amount of a structured learning, because this topic is becoming more and more and more complicated. It has started with UPI, and then it has gained prominence into a fintech industry. Now we are talking about digital lending. Then we are talking about regulating the gaming industry for certain reasons, and now we are talking about international aspects. So the subject has become so vast in the last 3-4 years that it is high time for the CA fraternity and also the curriculum designing board to look into this entire subject of what is payment, what is the settlement, what role these payment entities and the settlement entities play. And in fact, the skill sets of the chartered accountants more from the perspective of how we are in the forefront of technology, how we give an assurance function as a part of our information systems audit, for example, how we are able to give good governance guidance to entities like startup entities, and how we can provide policy input in terms of the taxation policies for these fintech startups. There are several areas which we can lend our expertise. But for all that to happen for the chartered accountant fraternity, it is important for us to understand the subject from the basics. That's the broad theme. With that intention, I have been in touch with some of the office bearers in the recent times. And I think that is how I finally got into this. I think somebody is writing chat is disabled. There is no chat is not disabled. I think I'm able to see your question. So you can once in a while post it, but I'll give you some time towards the end also to share your questions. Okay, thank you. So based upon that, the point I'm trying to make is that it is interesting to see that there is not much of activity that the chartered accountant can play in this startup ecosystem, and also fintech ecosystem, much more than any other tech ecosystem in the fintech ecosystem. And for that, all we need to do is that we have to create a kind of set of professionals who understands banking, payment, and regulations and the latest trends. once they know this industry in a much more detailed and a in-depth manner, they'll be in a position to contribute to the success of the industry. So with this broad idea, I was in touch with some of the office bearers, and I'm glad that I think Mr. Sunil Mandava would have contributed to this invitation, and I thank him personally. And with that brief background, let me share a small presentation I have prepared. Are you able to see my screen? You're on mute, sir. Arun?
Sir, yes, sir, it is.
Good, good.
Okay.
So what I have mentioned is considering the chartered accountant's role in a digital age, and I wanted to just give a kind of a little more color to say that how do we need to stay ahead of the curve in terms of a better career prospect, not necessarily just as a theoretical exercise. What needs to be inculcated for the fresh minds, people who have just out of the recent CA final examinations, and those existing people who have with the early experiences of chartered accountants. So what are all the things that we need to gather as an experience? And for the experienced professionals, there is some amount of unlearning that we have to do. While there is a learning component for the early age chartered accountants, there is an amount of unlearning, because some of the things that we have seen so far in terms of banking and finance is not the same thing as a banking and finance in the tech world. So both this learning and unlearning I'm trying to capture here. And there are only two key agenda points that I am trying to put it here. One is basically to give you a brief introduction to the financial technology fintech industry. What exactly is that? When we talk about fintech, people may say several things, but I just want you to give a structured understanding of what does fintech industry, what are the like entry points, what are the exit points, and what do generally fintech industry does. And then I want to just share some of the tips in terms of how CA can stay ahead of the curve in the fintech industry. While I want to give you some insight on the first topic, explaining us what is fintech industry, maybe I'll take a pause here. If any of the members wants to add anything in terms of what do you understand about fintech industry? Any few members, I don't know how to interact. I think the chat box is open. But if any other way to interact in this session, I'm happy to listen to some feedbacks just to understand what do you call or what do you understand by fintech industry? Anyone you want to message, or I don't know what else is the mode of interaction.
Sir, the chat box is enabled, sir. They can chat, sir.
Yeah. So chat box is enabled, right?
Yeah, sir, it's enabled, sir.
It's enabled actually. So people can write in the chat box. Anyone? I'm not able to see the audience actually. I am not able to. Yeah. So mostly payments are the primary thing, and yeah, lending that Ashish, technology applied to finance. Okay. So basically, like whatever you have mentioned are, I think, the components are the components, the entire ecosystem of the banking payments through tech intermediation. I think this is a good way. In fact, this itself, the few responses that have come here are the kind of responses I just wanted to see in the initial stages, because whatever we are talking about these responses, like payments, for example, are related to fintech. Or say, for example, banking ecosystem through tech intermediation, for example. So this is the way in which we will be understanding fintech. It is basically trying to understand the elephant and say, for example, the 9 blind people. So each person interacts with this elephant in a dark room, and each of them are a blind person, and they try to understand, is this the elephant? They can't really make out. Somebody touches the leg and says that it is like a tree. Somebody touches the trunk and say that it is like a chula, or somebody touches the body of the elephant and thinks it is a wall. So this is how currently most of the folks treat about understanding of fintechs, because payment is one part of the fintech. Payment is one part of the fintech. The entire ecosystem of bank through fintech is a closer or a much more closer definition. So, for example, if we have to really understand what is banking, to understand fintech, we need to start with that definition. If we have to enable any kind of a banking service through technology, is the closest way to define fintech. For that purpose, we need to understand what technically or generally, traditionally, banking is defined as. So banking is basically, we have got two important processes: deposit taking process, you accept money, and credit intermediation process, you generally intermediate in the form of loans that is given to the public. So you have liabilities and you have assets. Liabilities are the deposits taken from the customers, and loans you are giving it to the borrowers actually. So the money flow on one hand, which is the most important intermediation role. I think I'm glad that one of the participants have used the word intermediation. The intermediation flow is basically the money that is collected from the depositor is intermediated in the form of a loan to the borrower. That's a one intermediation. Second intermediation is basically the money that is as a part of the payment transaction, the money that is going from the customer to the merchant. So again, the banks do a kind of an off the balance sheet, like it is not sitting in the balance sheet, because the deposit sits on the balance sheet, loan sits on the balance sheet, but the money which is as a payment doesn't sit on the balance sheet, but these are all the facilitation services that the banks does. So the banks facilitate payments movement from customers to their merchants, which is typically a P2M, like a person to merchant kind of payments, and also P2P payments, which is basically from one person to other person. So P2P transactions or P2M transactions are in these recent days. There is also something called as P2PM, person to personal merchants, which is basically small petty merchants like your street vendors, your watchmen, your mom and pop stores, kirana stores and all. So that is another category of payments. So bank does two types of intermediation. One is deposit intermediation into loans. Second is the payment intermediation from customers to merchants and other similar type of payment transactions. Now, with this broad understanding, if we have to see where does fintechs come into? Fintechs come into these intermediations. One is starting with deposits. In the deposits, between the depositor and the bank, earlier, if you have to do a kind of an intermediation, bank used to collect the money directly from the customer. Nowadays, what is happening is, instead of you depositing directly the money in the bank account, you're also creating a fintech entity like a Paytm, or you can have any other fintech entity, which also provides you what is called as a PPI service as per the regulator, which is prepaid instruments, which normally is called as a wallet service. A wallet service is basically, instead of keeping the money in your bank account, you are now having these payment applications or apps which also provide the wallet services for you. So as long as it is like any other app, like it can be a Google Pay app, or it could be Phone Pay, Paytm, any payment app generally provides you wallet services. And if you don't have any kind of a requirement to fulfill your KYC, up to 10,000 rupees you can use in that wallet. Or if you have completed your KYC, you can have a higher amount for transacting. So this is the first break or first insertion that has happened by the fintechs into the banking industry. So instead of allowing the customer to directly get the deposit there, and instead of allowing the deposit customer to talk directly to the bank, fintechs have made an inroad with the licenses given by RBI for the prepaid instruments. And they started competing with the banks. So nowadays, most of the payment transactions are not happening directly from our traditional bank accounts. People are comfortable in terms of drawing some amount of the deposit that we have in our bank account and keeping it on the wallet itself. And from that wallet, we are making the payments. So this is the first entry of the fintechs into the banking ecosystem. The second entry that has happened is into the intermediation of the payments. So earlier, what used to happen is that if I have to make a payment, banks used to provide both online payment services and offline payment services. Like for example, a merchant wants to collect the money from the customer. Earlier, if you have seen in the merchant establishment, which is like a shop where there is a sale happens, the point of sale, you would have found basically the EDC machines, electronic data capture, at the point of sale machines or the credit card machines. Those machines earlier used to be supplied by the banks, and the infrastructure for the purpose of acceptance of your cards is also supplied by the banks. So earlier you would find more HDFC Bank machines, ICICI Bank machines. Those are the kind of common EDC machine brandings you would have seen. Nowadays, these machines in an offline context, when you're making a payment to a customer face to face in an offline context, these machines are also now being provided by the fintech startups like Paytm. For example, if you see the EDC machines at most of the places, you will find Paytm machines or Pine Lab machines for that matter. So this is another way of like fintechs entered into the payment space in the offline payment context. So completely now taken over in terms of the, or they have taken the competition head on with the banks. And the kind of features these entities have provided, like for example, the Paytm, the machine that is provided to the shopkeeper not only provides a machine swipe or a card swipe facility, but it also generates a QR code which you can easily scan. And once the transaction is completed, for the merchant, it is also convenient to listen to the transaction. The soundbox innovation that we have done is an important activity through which merchant gets a confirmation without even looking into the screen or the receipt or anything. While performing his own day-to-day activities, he can also listen to that the credit has happened into his account. With those innovations, the distance between the customers and the merchants and the banks themselves has further increased. And in the space, entities like fintech and entities like Paytm and Pine Labs have made a great inroad into the offline payment space. Similarly, in the online payments, you have a website and you want to sell your books, for example, or you want to sell your, say, for example, any other additional products or anything that you want to sell. You have to basically integrate your website to a kind of a payment gateway where you will be able to receive money from various forms of what you call payment instruments are from different net banking solutions and from different credit cards that the customers can want to use or different debit cards that the customers want to use. So you have to make your website available for most people. And for this purpose, earlier again, the banks used to be the leaders in terms of providing payment gateway solutions. And mostly the fintechs used to be only the gateway providers. They used to only provide the technology, and the banks used to run this entire aggregating business. So a customer who is like an author, like I want to sell my book, I want to create a website and I want to sell my books. I have to integrate with a payment gateway provider. And earlier, like 2013-14, the payment gateway providers are tech companies, but the transactions used to happen in the back end by the banks itself. But nowadays, what has happened is there are these new entities that the Reserve Bank of India has started giving licenses. And these new entities are called as payment aggregators, which are online payment service providers. They collect these entities along with the banks. This space is also completely dominated by payment entities. And if you have seen the recent announcements that are coming up, there are so many licenses that are getting rolled out by the regulator with a certain specific regulation for these entities, not only providing a gateway service. A payment gateway is nothing but like a EDC machine in an offline context. In the offline, it is called as EDC machine, where you are going to collect the money by swiping the card or showing the QR code. In an online context, if you want to do the same thing in a technological way, that would be a payment gateway. But the role is basically to collect the money from the customers, and then you sort out and you settle it to the merchant at the end of the day, or at a T+1 or a T+2 day, depending upon your contractual terms with the merchant. So this is another way in which the fintechs have taken over some of the businesses from the banks. And the third important thing, earlier days, banks used to provide loans to the borrowers. So the loans used to be like home loans, for example. If most of the CAs might be aware, the practicing chartered accountants, they also act as DSAs, the direct selling agents of the home loan services to the customers. That is one way banks used to have multiple direct selling associates, direct selling agents, and these customers refer the customer to the bank, and bank used to then outsource some amount of form collection and maybe the basic due diligence and maybe the explanation of the basic features of the loan product, doing some kind of an onboarding activities that they used to outsource, and then they will onboard into the bank as a kind of retail lending activity. But nowadays, this entire process has been completely automated. And what we now are seeing is called as digital lending service providers. So the same way how a chartered accountant used to do a direct selling agent, fintechs have now taken over that role as a digital LSPs. LSP is basically a loan service provider and lending service provider. And recently, from September 2022 onwards, Reserve Bank of India has come out with new guidelines in terms of banks, if they are dealing with borrowers through these digital lending service providers, there is a whole set of new regulation that has come up in terms of who could be a lending service provider, what sort of policies and procedures that the lending service provider should have, what sort of disclosures that the LSP has to give to the customer, and what sort of disclosures that the bank has to give to the customer or the lender. It can be a bank, it can be a non-bank finance company, and what sort of the technological controls the bank should have on these lending service providers. How does the movement of the funds between the bank and between the LSP and between the customer, how does the money movement has to happen? It is a very interesting subject. November 2021, RBI has come out with a detailed working paper guideline in terms of what is the risk involved in the digital lending and what is the need for regulation. And it has released out the working paper for the consultation in March 2022, and the final guidelines have come in September 2022. Now, this big picture is what is the total fintech ecosystem. So I think I once again want to compliment one of the responses I have received. A banking ecosystem finally intermediated through technology is what is called as a fintech ecosystem. Now we have generally gone through this entire journey. We started with the banking ecosystem. A banking is basically taking deposits and then doing an intermediation of the loans. That's the first intermediation. And the bank also does a kind of a payment intermediation, starting from customers to merchants. The payment is also intermediated by the banks. Now, when we talk about fintechs, fintechs have made they have made their way into each of these three areas. In the deposit taking, fintechs have started providing wallet services. And by virtue of that wallet services, they created a distance between banks and the depositors. So now the depositors are trying to pull their money from the bank account, keep on the wallet. It could be a Uber wallet, or it could be a Ola wallet, or it could be a direct Paytm wallet, or it could be a Google Pay wallet, or it could be a Swiggy wallet. Everywhere there is a wallet on which you are putting some money for the purpose of dealing with the transactions in that app, in that ecosystem directly. So your reliance upon the banks to provide the payment services has drastically come down. And if this app is linked to your payment app, then it becomes a kind of primary payment fintech. Otherwise, there are other tech companies which are also providing minimum wallet services. So that is the first distinction and the first inroads of fintech into the deposit taking activity. The second inroad that has happened is payment business. Payments, we have divided it into two categories, offline payment and online payment. Offline payments, earlier the banks used to provide the physical machines, which are called as EDC and the POS machines, whereby the infrastructure, the card acceptance infrastructure, when the customer comes and swipes at a merchant establishment, the machine used to be provided by mostly the banks. Nowadays, what is happening is that instead of banks providing these services, these machines are provided by the fintech entities. And not only the card acceptance infrastructure has underwent tremendous changes. Instead of swipe, you have got tap and pay cards, and also you have got QR code enablements. And these machines are getting provided by the fintech entities. They not only provide the a machine, they also acquire the transactions and becomes a payment aggregator in the offline context. In the online context, similar to the EDC machine, you also provide payment gateway services. Payment gateway is a basic technology that will be provided. Earlier, banks used to provide collection services as a money flow, and payment aggregators used to provide, like Citrus and all earlier used to be there. They used to provide the payment gateway services. But nowadays, RBI has come out with a new license category. Whoever is providing an online payment aggregation needs to be licensed by RBI. So most of the folks started applying to RBI and the applications are getting processed. And by this new set of licenses, RBI also recognized the entry of the fintechs into the online payment aggregation business. So this is how the fintechs have made their inroads into the distance between payments by customers to merchants and the banks. The third important inroad that the fintechs have done is into the lending intermediation. I give you an example of a chartered accountant who used to provide a direct selling associate or a direct selling agent to a home loan offered by a bank earlier in a physical setup. That similar kind of a setup is now taken over by fintech entities who are acting as what we call as the lending service providers. A loan service provider or a lending service provider typically creates an app. In that app, he collects the customer's related data, which is basically reviewed from time to time, and a profile of the customer is created. And depending upon the profile of the customer, these customers will be referred to certain lenders. It could be a bank or it could be a non-bank. And since in an online context, the amount of the data that is generated about a customer is too much, the amount of the information which is necessary for building up a credit profile is much more finest and much more niche. And having such kind of a robust information helps in terms of taking a credit risk assessment decision much more sharper. Earlier, when you are taking a home loan and when a chartered accountant reviews the home loan file as a DSA or a direct selling agent, the number of parameters a CA might have collected as a part of the onboarding activity could be 20 different parameters. Where do you live? Which house property you want to purchase? Whether you are owning a car or not? Whether you are owning a two-wheeler or not? Whether you are having a salary bracket? Are you paying tax? So there are like 10-15 parameters that the physical application form would have collected. But nowadays, with the fintech entities constantly having the access to the data that you are sharing with the app, the amount of the information that is available to the fintech entities is much more huge, and accordingly, the profile that they can build on you is much more refined. And using that information, they'll be able to predict in terms of the risk assessment that is involved in the loan that you might take, and the value of the loans also have come down drastically. And that drastical values, like earlier, if it is a personal loan, we generally used to talk about 5 lakhs to 10 lakhs of personal loans. But these days, even loans of up to 1 lakh or 50,000 loans are also becoming very popular. And with this, fintechs have entered into the space called as digital lending service providers. And what has happened with this transformation, there are two important segments which are hitherto unaccounted or are not considered by the banks. For example, you as a chartered accountant would have noticed if you are setting up your own practice, earlier when you have to start your own firm and you go to the bank and you want to get a kind of a loan to set up your office or you want to increase your business, banks typically used to have a lot of questions in terms of what is the collateral you are going to provide, what is your proof of income. So most of the chartered accountants also might not have a kind of a regular income. It is all dependent upon the client fees that they get, but that is erratic. And at some points in time, like 10 years before, 5 years before, for the banks to make an assessment about the CA's ability to generate income is very difficult for them to ascertain, because your bank accounts might not show the regular flow of income like a salaried account guy shows. Now with that, sometimes the CAs used to face some difficulty in terms of getting loans. But with the fintechs entering into the space, one thing that has happened is that you started creating a complete digital footprint of every transaction that is happening. And that footprint is able to be converted into a kind of a credit profile. And that profile is being used for the purpose of lending even to the small ticket sizes. While CS, it may not be a big difference. But for the street vendors, the dosa shop vendors, or the chaat bandar vendors, or the kirana shop stores, are your own maid, or a driver, or a watchman, or a security guard, for these kind of people, the entire ecosystem that I have mentioned, like the wallets that is getting provided, online payments that are happening, creates a kind of a digital footprint, which helps them to get into digital loans at a much more faster space. And the innovations that are happening in those spaces is very unique and makes it convenient for the people to get a loan, and a very small ticket loan. And the recovery is also much more sharper, because once you give a loan to this dosa shop owner, he may not take the loan and go away, because ultimately his loan is dependent upon the daily collections through the online app again. So before he takes the loan, and start using for his own purpose, if there is a recovery date that comes, the amount gets pre-deducted from his daily collections and the balance is settled into the what you call the street vendor or the dosa shop owner. To that extent, there is a kind of a tighter grip in terms of the payments that have to be collected from the loans as well. So this is how the entire ecosystem has been transformed by the fintechs from the way we used to see the traditional banking ecosystem. Let me pause here. So one question is how fintech companies are making money? Are you charging to the traders for the payments collected? What is the typical percentage, like credit card at 2 pieces? I just see most of them are small paid. This is a fantastic question. How do fintech companies make money? If I have to answer this based on our own experience, our Paytm's own experience, we have got layers of money generating businesses. The first layer, let me give an example of a street vendor who sells, say, for example, those as a street vendor. The vendor, I provide a service as Paytm, the QR code to be sticked on his, say, for example, the truck where he is going to sell these dosas, for example. That is a non-revenue activity. He simply pastes the QR code of Paytm and he collects, and at the back end, I help them receive the money from different payment instruments, and I will settle into the dosa vendor's account. So that's the basic service which we do for free. The next service, if the same dosa vendor is in a position to install the QR, what do you call sound box. The sound box is a subscription item that we will provide to him. So the sound box not only helps the vendor in terms of the midst of like 100 people around him, and he has to actually fastly handle the dosa orders instead of worried about the payments. The sound box is going to be very good supporting tool for him. That sound box installation, if you see across all merchants who are using Paytm, they are using this sound box, and that is the subscription we get on a monthly basis. That's the primary source of revenue. Then the next level is basically the QR codes that we see are called as static QR codes. But in the sound box or in the machines that we provided the offline shops, the machines also flash QR codes, which are called as dynamic QR codes. These dynamic QR codes are also a tool to prevent fraud and also helps these merchants to do back-end reconciliation and analytics much sharper. Like, for example, you want to know, like a dosa vendor wants to know, like which are the payments generated from X apartment versus Y apartment, or which are the days in which his collections are high, or which are the type of customers, at what time his payments are high. There are a lot of analytics that you wanted to do, which is not necessarily for a street vendor, but for a small time shop owner. These kind of analytics and account management becomes much more difficult because this kirana shop owners doesn't know anything about the digital analytics actually. For a basic analytics subscription that they can do for Paytm, we provide those analytics services also, which is again a revenue generation activity for the entity, because they provide this kind of additional MIS services to these vendors. That's the next level. And then later on an online, we also provide payment gateway and payment aggregation. That is also a subscription. So you are a website and you want to sell out your books on your website. For the purpose of integrating your website to a payment aggregator or a payment gateway provider on a monthly basis, depending upon the volumes that you are going to charge, again, we are going to charge something which is a subscription fees. Now, on top of it, now if you have got this entire merchant database with you, entire online merchant database, offline merchant database, there is merchant lending that we facilitate, because we have got enormous amount of the data of the merchant, how much collections he is making, and what is the type of collections he is making, what is the steadiness with which the collections are there, which is a rich amount of data, which helps the merchant for the purpose of creating a credit profile, and that profile can be used for the purpose of showcasing the merchant the available lending that he can get from the bank or a non-bank. And once we give them the loan, I'll also get from the lender the amount of the loan origination fees, like a chartered accountant, how you used to get a loan origination fees from the bank for their DSA services for the home loans. In a similar context, in a digital space, we get this loan origination and also the collection fees from the lender. So in terms of the pyramid, this is the kind of a monetization pyramid, which is the way the payment companies makes the money. And here the volume is the game. Scale is going to exponentially increase the payment opportunity. But at an individual transaction, it is very small amount. And in terms of the interest rates, these are much lesser than the credit cards, but not as less than as what you call the personal loans actually. So it will be somewhere between starting from 12-13% to like the credit cards are at say 36% to 24%. So those are the kind of extremes with which the banks operate with their traditional instruments. We are somewhere between at 18 to 20%. Which is a kind of a breather for the people who doesn't have a credit history, but starting to develop this credit history. And what is the revenue model for fintech companies? I think I have answered this query. So any more questions in terms of the basic industry? This is the basic industry. So whoever has got an in-depth understanding of a banking industry, we need to, strip the services. Stripping the deposit services, stripping the loan services, and stripping the payment services, and then you make fintech apps adjusted into the spaces between the banks and their customers. That is how the fintechs have started entering into the road. So, any more questions on this, please? Okay, now I'll get on to the next part of this session. Which is basically the tips which we have to understand to have our own expertise. And I think some question is there, if I'm not mistaken. Cost of transaction versus benefits in terms of the speed and control. And I think the cost of transaction, as I mentioned, is very minute, but the game is in terms of the volumes. And the controls are also, again, as an important space. We are going to talk about in the tips about the industry. We are going to talk about that. But the game is about how the facility is made convenient to the customer, safe to the customer, and secure to the ecosystem. Now, if you can prove these kind of things, this is where the challenge comes in terms of the questions about the long-lasting service provider is one who is going to give a safe and a scalable and a secure ecosystem for the participant to transact. So definitely it is a question, the same question people would have asked at the time of internet banking, at the time of ATMs. In fact, when ATMs were first introduced sometime in 98, 99, we used to worry about, because for the first time in the history of the banking, starting from 1950s or 1930s, we have seen in 1990s, the money is not kept in the bank branch, but the money is kept on the roadside in the ATM machine. So there was a lot of apprehensions at that point in time, because inside the bank branch, there is always custody, there is always locker, there is always a police alarm. But now for the first time, we thought that this entire amount of money is kept on a road in an ATM machine and only one small guard is there. Is it safe or secure? So there are a lot of apprehensions that have happened. Same thing happened with internet banking. Is internet banking, digital banking space is safe? And to a large extent, a lot of times people were not very much comfortable in sending. Even some set of older generations are not very comfortable in internet banking. But now if you see the current generation, they are very much savvy about internet banking. So I understand there are apprehensions in terms of speed and controls. At each stage, each generation has come out with its own innovation. And banks have started with ATMs, banks have started with mobile banking, banks have started with internet banking, and that has extended further and further. And Reserve Bank also started coming out with guidelines. And similarly, for the fintech entities, RBI has come out with the two important guidelines. One is the master direction on the digital payment security and controls. And there is always the system audit that Reserve Bank does at periodic intervals. And at the same time, there is a cyber security framework. In fact, this is exactly the point I would like to mention. These are the areas where the chartered accountants can help this fintech industry to get much more confidence, much more assurance about their IT systems and controls. So we should not treat fintech audit of an IT system as any other IT system audit. When you are doing an audit of a, say for example, IT audit of a biotech company or a biopharma company or any kind of a consumer durable company, the way you look at the IT system is completely different versus when you're doing an IT system audit of a fintech entity. Unless we understand what business that this fintech entity does and what is the extent of dependency in terms of safety, security, and privacy of the system on the IT, will not be in a position to give that kind of an assurance or a comfort to the entity. So that is where the role of the chartered accountants also come in as an immense value. Okay, I think we are done with this. So the first thing is unlearn. So the first tip I would like to mention, what happened to this? So the first tip I would like to give, there are 9 tips I have gathered to make sure that this session looks a little interesting and important for all of you. So I said that first is most importantly is unlearn. Unlearn is basically, this is something I also noticed. Like I started my career as a PwC, and I started in Lovelock and Lewis in 2001, 2002 as a chartered accountant. And while I was auditing the bank audits at ING Vaishya Bank and GTB at that point in time, and also the SBI, different types of audits, I developed a passion towards banking industry. So after 2 years of my career with PwC, I made an inroad into ICICI Bank as a branch operations manager in Hyderabad in 2002. And then I went into banking industry. I have spent, like ICICI Bank, roughly about 11 years till about 2013. Now, after that, ICICI is like a mega bank which has got all sort of services. From there, in 2013, RBI has come out with, and 2014, RBI has come out with new licenses for 2 banks, Bandhan Bank and IDFC Bank. IDFC Bank became IDFC first recently, but when I joined IDFC, it was IDFC Bank in 2015. So in 2015, when that bank started, it is a very small retail bank. Now, when I was there in ICICI, we have got enormous amount of customer base, and we are all retail customers, and we know what sort of controls and the architecture of governance and all we used to be very much familiar with. But with IDFC coming in, we started this entity. This is a startup bank, but it has got too much of infrastructure loans on the asset side. Now, there are a lot of deposits it has collected as an NBFC. Now that it has become a bank, it has to convert those deposits as they redeem over a period of time. It has to substitute that with the retail depositors. So the game is basically how IDFC Bank is going to have retail deposits more and more. That's the basic challenge for the bank. Now, right from the time we were setting up the IDFC Bank, the entire amount of experience is an unlearning experience. So the importance is basically not to make our learnings in, say, for example, a bigger organization, and then start dumping it on the, say, smaller organization. I think the important element of tip 1, when you start learning about certain new things, is start from the context of the entity that we are working. In fact, I am seeing it in most of the chartered accountants I deal with. When I come to a lot of the CA firms or many consulting firms whom I engage as a part of my day-to-day role, when I interact with them, I ask them like, what are the kind of controls I need to do? The way the standard responses come is basically they see it in banks that there is a kind of a great control that is there. There is a kind of an organization structure that is there. There is a kind of a technology automation that has happened in that entity. And the general advice that comes is that, okay, in the banks, it used to happen like this. So why don't you implement this control? But the important point, I think, in the questions that you have mentioned, out of 5-6 questions that are mentioned, the one important question is, how does fintechs make money? So the money is an important component for this fintech entity. The more amount of money that is getting invested in terms of these controls and in terms of these automations, the more amount of the cost that it is going to add. So what is the kind of a right balance between the cost and also the service that we need to provide? So the need for these entities are the consulting firms to understand this business. Like, for example, when you talk about our own business, most of the CA firms that I interact generally doesn't understand what is the difference between a payment app. Like, for example, most people compare ourselves with Google Pay. Now, Google Pay is a payment third-party service provider. So Google Pay is not a bank. Phone Pay, for example, is not a bank. Whereas Paytm is a Paytm payments bank. So the UPI services we provide are part of the Paytm payments bank. So as a bank, we are a different entity compared to a Google Pay or a Phone Pay. But comparing, instead of doing this kind of an understanding, I see most of the times people compare the market share of the UPI. They say that Google Pay, Phone Pay, and Paytm, as if like these 3 are the same entities. So the people's understanding about the entity level differences, which entity we are talking about? Are we talking about a third-party payment app provider, or are we talking to a bank, is somewhat missing in the common public, and even also the best of the chartered accountants that I interact with, they don't understand the difference between a regulated entity status of these entities. So you can be a lending service provider, which means a kind of a notification is required to the regulator, not any kind of an approval. You are a payment service provider. That means you should have a license, or you should have applied for the license to the regulator. Or you are a payment bank, which means that you are supposed to be getting a separate license as a differentiated bank. Or you are a commercial bank. Or there is a third-party app service like a PhonePe or a Google Pay. These are all the third-party app service providers. So your understanding of banking has to be completely unlearned. And the new learning that has to come is basically about the payment lexicon. The payments industry, how does it operate? Who are the players in the payment industry, and what are the different roles that they play? Are they wallet providers? Are they payment service providers? If they provide the payment service, are they providing payment services for online entity or an offline entity? Is it a loan service provider? Is these services provided in combination? Are these provided through different entities? Is a kind of a new learning experience that we need to do. And just like the thinking that this is a bank and the banking using technologies, fintech is not going to be helping us in gaining the expertise. That's the first important unlearning tool. Move from banking to payments is a completely unlearning experience. Second thing is economics. It is another important thing because now people are also comparing a central bank digital currency. For example, Reserve Bank of India is coming out with a central bank digital currency. Now, there is a complete difference between what is a payment app and a central bank digital currency. Central bank digital currency is the money provided by the Reserve Bank of India. It is as good as your cash. Whereas the payment app is like the money that is there in your bank account. So there is a lot of difference between these two. And why does the central bank has to issue a central bank digital currency, and what role the fintech entity plays in this CBDC is another different concept we have to learn altogether. Of course, that's a different day's discussion, but we need to understand that monetary economics in terms of what are the, like if you have remembered our own studies that we have done in economics class in CA, there is M1, M2, M3, M0 that are base money, and then there is a narrow money and there is a broad money. So the M0 is basically the central bank digital currency. M1 is basically the narrow money, which includes the bank deposits. And then there is a broad money, which also includes your post office deposits. So why do all these things are important in terms of competition? Is CBDC a competition to the payment app or something? Is something you can't answer so easily unless we refresh our knowledge and come out of little bit of our finance mindset and get into the roots of monetary economics and also behavioral economics in terms of what attracts a person to choose an app A versus an app B. That is going to be behavioral economics and international economics. Why is, say, for example, India tying up with Singapore Pay now? And what is the geopolitical significance? And why are the countries like Russia, India, and China wanting to settle their trade transactions in local currencies? And why BRICS countries are trying to come out with a BRICS coin, for example? So there are international, implications in terms of the payment systems, because whoever controls the currency is going to control the country. So each country is now very much threatened about the nature of the currencies and the payment systems that are happening everywhere in the world, and they are coming out with their own innovation. So if you want to really understand the implications of the payments business to the country, it's important for us to come out of our finance mindset and then get into the discussions about the payments mindset. So I see a lot of chartered accountants engaging in CPE activities immediately after budget announcement. Once a budget comes, you will see an enormous amount of discussions on what is a proposal that goes into budget, what is a proposal that is finally accepted, what are the implications of the budget on the day-to-day things. But I don't see any kind of a discussions happening when an RBI governor announces a monetary policy. That is going to be the differentiator for a chartered accountant in terms of understanding the fintech industry. So why does the RBI governor announce a kind of G20? There is a new PPA instrument that is allowed to be operated. There is a new announcement in terms of how UPI is going to be made as UPI Lite. And the governor might announce that he is concerned about the digital lending. Why should a governor be concerned about digital lending? And there is a kind of say, for example, guidances that monetary policy gives in terms of the charges that are getting charged on the UPI, for example. There are a lot many things. There is a need for a discussion in the CA fraternity to understand this industry. So how we have gained an expertise in terms of tearing apart the entire fiscal policy, which is the budget document, we don't do a kind of a similar kind of a tearing apart of the monetary policy document, which I find sometimes surprising. We have a large role to play in terms of the monetary policy as well, but we are not giving as much as important. Monetary policy is as good and as important as the fiscal policy. And in sometimes I think monetary policy is the one which delivers the actual implications of the fiscal policy. So we have to unlearn some amount of the fiscal policy and also start learning about monetary policy. And similarly, law. Law is an important subject. We try to focus on Prevention of Money Laundering Act. Most of us focus in terms of the practice-related aspects of the Prevention of Money Laundering Act. So what are the adjudication powers? As a power in terms of enforcement director, can we do search, seizure, surveys? What are the times when an arrest warrant can be issued? How do you confiscate? How do you demonstrate an evidence? So these are the things, but we really don't get into the details in terms of a money laundering typology. So what are the new typologies of money laundering that are happening? How these fintech entities, maybe knowingly or unknowingly, become a conduit to the money laundering, and how darknet services are getting spread, and where this entire money that is getting routed through these thousands and millions of transactions has got a taint of some crime, and how the taint can be removed, and what is the kind of capacity building we need to do for the police or law enforcement agencies to unearth some of these fraudulent activities, and where do we can lend expertise as a chartered accountant to understand the trail of the money? Who is better equipped to see the trail of money than a chartered accountant? But we don't see coming out of our own comfort zone and trying to understand the legal implications of payment industry in a much more detail from a typology perspective than from a service perspective. That's the first tip, unlearn. The second tip I want to say is understand. You sharpen the fintech's lexicon. This is another important area as a community we need to focus upon. We don't know the difference between a digital currency and a cryptocurrency. For example, all currencies, in fact, we don't even know what itself is like a currency versus a token. So there are like, these are all learnings people only had exposure to only in the recent times with the phenomena of these Bitcoins. But what are digital currencies? How do they differ from the cryptocurrencies? And how many types of digital currencies exist? And if a central bank digital currency comes, should it be called as a digital currency or should it be called as a cryptocurrency, for example? And should it be called as a token? Is it a token-based payment or is it an account-based payment? So there is a slight and fundamental difference in respect of each of these terms that we are using. Unless we understand these terms, unless we understand what is called as a token economy, which is what the economy that we are now getting into, we'll not be in a position to really understand where the fintechs are contributing or where the fintechs are heading towards. Similarly, what is the difference between centralized ledgers and distributed ledgers? I think to a certain extent, here there is an expertise on the chartered accountants because they're also understanding what is a blockchain-based transaction maintenance and monitoring. So here there is about some sort of understanding, but to what extent these distributed ledgers are used for the purpose of payment transactions is another area for us to explore. Structured learning and unstructured learning. Again, most of the people are familiar with, say, for example, algorithms and artificial intelligence. But with this structured and unstructured learning and then algorithms that we are using, how smart contracts are built. And when the smart contracts are built, how a decentralized finance will come into picture. So we have talked about only the centralized finance. Centralized finance is basically a bank is there as an intermediary and between the customer and another customer. Similarly, there is a central bank, which is a centralized intermediary between one bank and the other bank. And in the international context, there is a BIS, Bank for International Settlements, which again is a sort of intermediary between, or a SWIFT, which is a sort of intermediary between one country's central bank to the other country's central bank, or one country's financial system to other country's financial system. But if you don't have these central entities and you are running entire your financial system on the smart contract basis, that is when the situation is called as decentralized finance, DeFi. Once a DeFi comes into picture, now all the logics that we have discussed are going for a toss. So the FTX, whatever that has bursted recently in May 2022, in the last 3-4 months back, and how, say, for example, Terra USD, which is like a stable coin that has got bursted. So what are the, what you call underpinnings, or what is the kind of a ecosystem that they have built? How does the smart contract enter into the finance world? And how is it like throwing away the centralized institutions, and why they are trying to throw away the centralized institutions? Where are they making money? And who are the people behind this, who are called as crypto whales, for example, who are going to dump these entire currencies onto the common public, and the entire market sees the kind of a complete downfall in terms of the value. So there is too much of learning that we need to do in terms of sharpening our fintech's lexicon, our understanding of what exactly is the fintech and payment industry. Then we need to also see the big picture. It is not all about some kind of a mad innovations that are happening. If you see in the United Nations Sustainable Development Goals, or even if you see in the G20 announcements that are happening, payments and digital infrastructure are going to be one of the most important innovations for the purpose of facilitating normal things. For example, we think a basic thing like paying a toll plaza toll. We think it is a kind of a 1 minute exercise that we do in terms of making our pathway towards the toll plaza. That 1 minute of holding onto that truck on the toll plaza is going to cost idling time, and that idling time is going to cost some sort of a petrol, and also adding to the time cost of the entire logistics and supply chain. Now, the FASTag, which is a payment innovation, which has enabled a seamless passage of the truck through the toll plaza, has done some sort of like 10,000, 20,000 crores of, say, for example, benefit to the whole industry. And this innovation in terms of how the FASTag has enabled a seamless drive-through, and but is integrated in the back end to a kind of a payment system, and that is supporting our highway infrastructure, and also logistic is a good case study for us to understand how payment system not only does a basic payment activity, but contributes to the primary activity. The primary activity is the logistics and the supply chain industry to be much more fast forward. So how do you make the delivery of your Amazon good? If you order today, how does it come tomorrow? It has to cross through all these toll plazas actually. And if the amount of the 1 minute, 2 minute savings that you are doing with the fintech innovations that are happening, the delivery becomes much more faster. And also the reverse logistics, when there is a refund of the Amazon packet, how it goes as a reverse logistics and go to the Amazon, and then the refund gets initiated, is also completely built upon the innovations of the payment. So it is not that the industry is creating innovations for the sake of innovations, but they're able to provide some sort of a seamless benefits to day-to-day life, like including the National Common Mobility Card, NCMC cards that we get, which can be used across the metro tickets and also in your public services. And also you can use it for the purpose of drawing your day-to-day ATM transactions, and also doing merchant transactions. So you have a metro card, you have got a public service card, you have got a ATM card, and you have got a debit card. All these things put into is a single NCMC card. So getting a NCMC card is going to save a lot of time in terms of customers having to juggle with multiple cards. And if you get a kind of a virtual NCMC card, there is nothing like that. You can carry all these things virtually. And the amount of the ease of experience and the efficiency that it unleashes onto the people who use these digital tools is immense. And the same thing is with the BBPS, Bharat Bill Payment System, for example. So earlier, when we were to pay our bills, I remember in 2012, 2013, if I am an ICICI Bank customer, ICICI Bank will enter into, say, for example, agreement with certain billers. It could be one gas company in Maharashtra, one gas company in Andhra, one gas company in Telangana. So the set of billers which ICICI has entered into contract, only those billers I used to be able to make a payment. But if the ICICI has a type of arrangement with that particular school or a biller I want to make a payment, I could not make the payment through ICICI bank account. But what NPCI has done is to create a Bharat Bill Payment System. A Bharat Bill Payment System is basically, if ICICI has entered into a tie-up with one entity, the merchant which is there, he is available to be seen even under the Axis Bank ecosystem, in the Payments Bank ecosystem, and that makes the kind of visibility of these billers across the banks. So each bank need not have a separate kind of a arrangement with these merchants and a one-to-one. So every bank to have a kind of a separate arrangement with the billers is going to be very time consuming, and it is not beneficial to the customers. I think in your terms, if I have to explain, like a FATCA and CRS. In a CRS arrangement, each country has to have a bilateral arrangement with the other country to share information. But instead of that, OECD has done a CRS template. So everybody subscribing to CRS have a kind of an automatic information exchange. In the similar way, instead of that, each bank having a kind of an arrangement with a bill payment, all these entities will have with one time, if one entity ke saath, if they have got an arrangement, it is visible on the other entities platform also through NPCI's interoperable technology. That is how the big picture is basically for the industry, for the innovation, for the infrastructure, for the communities, for the institutions. They're all like going to make an enormous amount of difference. So understanding the fintech's contribution towards sustainable development is another way to unveiling the big picture actually. Then that is the tip 3 to unveil the big picture. Then the fourth thing is not necessarily that you should always be gung-ho about fintech industry. You should also be a little bit skeptical about the industry. The skepticism is basically, are they promoting any kind of risks? Yes, they do provide certain amount of risk, primarily the technology risk. The security is going to be a challenge. So always we should be mindful, not necessary that the app is a secure app, but in the environment you are using the app. For example, if you are using the app, using a kind of a hotspot provided by your shopkeeper, there is always a danger in terms of somebody intruding and a man in the middle kind of an attack that can happen. Or if you are going to use, say, for example, the Paytm or any kind of a payment app, in a public transport, again, there is a similar kind of a risk involved in terms of making the payment. So you need to understand where from the security issues can come into this, and how are you getting into downloading of malicious apps in the name of like digital lending. This has become a kind of a very big menace in recent times. Most of these loan apps are automatically getting downloaded into your mobiles, and every day they will flash availability of the loans time and again, and we get lured with the interest rates and the easy availability of the loans, common public, and they start supplying the loans. And once they apply the loans, these apps would have got permissions to access enormous amount of data. And that enormous amount of data includes your private photographs, everything. And tomorrow, if you're missing a kind of a loan installment to be made, they starts blackmailing in terms of the access that they have got, which is what has led to suicides of several people. And that's the reason the government is doing a heavy crackdown in terms of the unauthorized apps which are providing lending services. There is a security risk. Scalability risk, some of the participants have asked, how are you making it scalable? So unless these transactions operate at a scale, we'll not be able to make money. So how do you make these transactions scalable? How does the new entrants into this entity can make them scalable is another risk that we have to understand about. Privacy risks, thankfully, we are going to have a new act. And I think this is another area of potential importance for chartered accountants. The digital data, digital personal data protection, DPDP bill that has been recently introduced in the parliament in I think December, which has to again get debated and then passed. So that caused enormous responsibilities for the digital personal data protection. And that gives you a lot of comfort in terms of data breaches and the investigations, and also data reporting and data rights that should be given to the consumers. It is going to be a sweeping legislation which will transform the way the fintechs manage the data, and fintechs guard your own personal data. And then there is a financial crime risk, as we discussed about fraud, money laundering, and cyber crime. And there is also a financial stability risk. Of course, this is not accentuating as much, but we are now seeing with the FTX market that is getting collapsed, and with the Terra USD becoming a stable coin that has gone burst after depegging with the dollar. We don't know what sort of financial stability risks these new age innovations will take. And also we are like, if you see in the last week, UK government has come out with a paper called as BNPL, Buy Now Pay Later schemes of entities, because the regulators are trying to watch out how much of the lending is getting created by these entities, and is the lending is systemically important to throw up any kind of a challenge to the country in terms of the overall financial stability risk. Thankfully, at the moment, it has not gone so big, but the worry is that in the next 6 years, I think by 2020, there is an expectation that the lending that is done by the fintechs is going to surpass the banking industry lending levels. That means we have to treat these fintechs as good as like banks. And when we are controlling in terms of digital lending, we should be able to be mindful of checks and balances that banks should be subjected to while lending through fintechs, which is what Reserve Bank of India has done with September 2022 guidelines. And it is an important read for any chartered accountant who wish to make their foray into the fintech industry. Then we have got on a constant basis, you should be in the touch with the regulatory environment. Everything is happening. In fact, this is another little bit of stepmotherly treatment that we give to regulations that are associated with finance and banking. We are very good in terms of tracking taxation related regulations. We are very good in tracking GST related regulations, CBDT notifications, CBEC circulars. But most folks do not generally do the innovations that are happening at Reserve Bank of India. Normally doesn't follow what's the Reserve Bank of India announcements. And Reserve Bank of India has got a subsidiary, Rebit, which is an IT subsidiary of Reserve Bank of India, which comes out with various studies. Then the NPCA comes out with a lot of innovations that we have seen, like the UPA, are they interacting with UPA with other countries, like the Pay Now that we have seen. And then there is a Reserve Bank Innovation Hub, which also conducts a lot of projects in terms of incubating certain new innovations into the Reserve Bank of India space. And then there is in Hyderabad itself, we have got IDRBT, development research into the banking technology. And that institute comes out with a lot of publications in terms of what's happening in the payment space. I'm not able to see much of the discussion or debates in the CA community about what these papers are. Like, for example, Reserve Bank of India has come out in September 2022, a concept paper on central bank digital currency. So how does that impact our taxation aspects? How does that impact our economy? How does that impact our India standing vis-a-vis international community? And what does this autopilot or this CBDC all about? Somewhere I'm not able to see that much amount of debate or discussion in terms of these kind of topics. And similarly, if you want to enhance your knowledge to the international topics, there is this new Basel International Bank for International Settlements, which is a Basel committee, which publishes phenomenally interesting and enriching papers and publications on big tech. Big tech is basically when the new technologies are not only done by fintech, but Apple Pay, Google Pay, Amazon, WhatsApp, these are all the new big techs actually. While Paytm is a kind of a fintech startup which has come from ground to has made a kind of a big entity, there are these big entities which are now trying to get into the fintech space, like Google coming with Google Pay, Apple coming with Apple Pay, WhatsApp coming with Facebook, coming with WhatsApp Pay, including Facebook entering into Meta, which is basically a kind of a stable point that they wanted to launch. So why are big techs entering into finance space? How to regulate them? What are the kind of financial stability risks that they throw to the regulators? Is an interesting study. And people interested in understanding what is fintech and big tech, we can study a lot of publications that are published by Basel Committee, and also international organizations like FATF. They have come out with a great study on virtual digital assets. So the virtual private currencies are the virtual digital assets, and what are the kind of rules and regulations banks have to follow if they're dealing with virtual assets. IMF has come out with beautiful publications and rethinking about money. So the money itself, the way we understand, is undergoing phenomenal change. So World Bank, World Economic Forum, OECD, these are all like under a constant debate to understand what exactly is money. Because in our earlier days, we used to define money as something which follows three functions. It should be a medium of exchange, it should serve as a store of value, and it should serve as a unit of account. If any entity is functioning these three, it is called as money. This is what we were told in our economics class. But nowadays, this function of money is getting stripped. So Bitcoin is becoming a store of value, but it is not a medium of exchange. Our digital payments like UPA are becoming a medium of exchange, but they are not store of value. And we are getting some kind of a decentralized economy. We are having native tokens which are acting as unit of account, but they are neither the store of value or maybe they're not being accepted as a medium of exchange. So we're seeing a lot of complications in terms of how money's definition is undergoing a change in the world that we are seeing. And in the world that is going to come, in the metaverse world, these are going to be like mind-blowing innovations and technology terminologies that will come. So for each of these things, how the regulators are thinking about putting in place regulations, what are the risks associated, what are the debates that the regulators are facing? Because some of the debates are something which we don't even understand, because the biggest debate in cryptocurrency is about whether the Reserve Bank of India has a regulatory mandate to regulate cryptocurrencies or not. So that becomes a kind of a little interesting thing to watch out. So is cryptocurrency something to be regulated by RBA, or it should be regulated by SEBI, for example? So there are like debates that are ongoing, and still we are awaiting for the cryptocurrency bill to be passed by the parliament. So it is interesting to follow like what is happening in international space in terms of these regulations. And then there should be sensitivity. While I'm saying that there are certain regulations, be sensitive to the startups, like which are the startups which are coming to you for availing CA services. I see a lot of the startups creeping about most of the services, basic services. They want to have some services about guidance on the governance function, guidance in terms of what do you call the taxation regimes, structures. How do you have to have structures, and how do you have to have, say, for example, development of finance-related functions? Actually, we need to be a little more sensitive about the kind of services that the fintech startups might want. So your ability to interact with innovation hubs like our T-Hub, or maybe the Reserve Bank of India Regulatory Sandbox, or maybe the incubators that each of these institutions like Indian School of Business has come out with, the incubation facility. So our ability to partner with these entities will also help us in terms of participating in this startup innovation. And we are sensitive to the fact that these startups are encouraging inclusion. These startups are like should operate in a kind of a framework of innovation, because each startup founder thinks that he has a great idea, but that great idea has to be like completely matched by the VC's expectation. So how do we make that the startup pitch in a way that the VC understand this, and why does the VC look at it into a different perspective compared to the founder's idea, for example? These are the kind of capacity building exercises that the established and experienced chartered accountants can do towards these startup people. And how do you make accountability for financial stability? Like when these trends are happening, when the new lending instruments are coming, when there is a security issue happening, are they going to, say, for example, threaten financial stability? So how do we create some sort of what do you call buzz about this issue in our day-to-day interactions of the chartered accountant fraternity is something we need to be sensitive about. And then the innovation mindset. So we ourselves should have a innovation mindset. For example, we always talk about double entry bookkeeping, but with the blockchain coming in, what we are entering into is called as a triple entry bookkeeping. I'll leave this as a kind of an exercise for the chartered accountants to find out. Whoever is there in this call, try to find out what exactly is a triple entry bookkeeping. In a blockchain, we enter into triple entry bookkeeping. How does a triple entry bookkeeping works? What is the third entry, and why is it relevant for us to understand this third entry? And what role that a practicing CA has to do when they're going for a kind of an IT audit or a blockchain-based audit if they want to do? You see, the COSO has come out with a very beautiful publication in terms of a blockchain-based audit, or how to audit a blockchain ecosystem, for example. So these are the kind of new technologies that are coming up. We need to imbibe for our own practice and our own experience, actually, and then guiding even the other regulatory startups through the guidance that we can give it to them for their governance, actually. So that mindset is going to be crucial for any chartered accountant who want to succeed in the fintech space. And then indulge in knowledge gaining. So I would personally say that the amount of the knowledge that is now coming free of cost, like we are having these certified CPE courses that the institute are organizing. I'm glad that there is a participation of like more than 200 chartered accountants eager to learn about these things. That is a great thing. And there are also a lot of courses that are available on Coursera, which you can see, and like Harvard X, for example. Or there is a great course, great learning courses live, which is also called as, I think, Wondrium. There are like too much of information that is available with small subscriptions like 2,000, 3,000 rupees a year. You can get enormous amount of material. And if you want to also get certified, for example, you can become a certified chartered, certified anti-money laundering specialist, or you can become a certified global sanctions specialist, or you can become a fellow of an international compliance association by entering into financial crime compliance as a kind of a niche field that is coming, or you can become an associate of a fraud control and a fraud crime and a control specialist as such, apart from our traditional qualifications like the information systems audit. And even if you don't want to become a kind of a certificate courses, and if you don't want to spend money, these courses are available at free of cost. And all you need to do is to audit the course. When you audit the course, all you need to do is basically just go through the course, understand this, and if you don't take any kind of a certificate, fine. These courses are available in a democratized way. Everybody can get access to these courses for the purpose of review and understanding. So indulge in that knowledge gaining, and equally important is share the knowledge that you have. So organize your, say for example, book clubs. Book clubs, there are enormous amount of new books that are coming in terms of discussing what is blockchain, what is central bank digital currency, what is digital payment, how countries like China and US are entering into a kind of a payments war in terms of the technology, how SWIFT, for example, is becoming a kind of a tool in the geopolitical space between the Russian war today, which we are witnessing, how SWIFT has actually changed the landscape between the overall ecosystem of the payment space. So let us try to understand all these things which are happening internationally. There is an enormous amount of good books that are getting released every second or third day. And these books can be like, you can have a kind of a book club activity near your CA Institute premises, and take one of these books, two of these books, and try to read and then debate in terms of how our lives are fundamentally going to change. Unknowingly to us, the world is changing. Like the NCMC cards that I have told, the UPI innovation that I have told, the FASTag that I have told, each of these innovations are becoming very important innovations, and they're going to influence our life one way or other. But we are not able to spend time in terms of understanding these things in our, what do you call, the grassroots level, to understand what exactly is the innovation and how it is shaping up the debate. And then we should shape up the national and global policy and debate. I don't know how many people from the chartered accountant community read the discussion papers released by the Reserve Bank of India, the discussion papers released by the Niti Aayog, not on the topics of taxation or not on the topics of accounting profession, but on topics relating to digital banks, the charges that have to be imposed on UPI or not, are the license regime, should we have to have an offline payment covered into a regulation or not, what is happening to the gaming industry and that gaming industry regulation, how is it related to the payment industry risks? So all these discussions and debates, to what extent we can also participate in the dialogue and then provide our valuable input to the government, is an important contribution that we can do. And in this process, from a knowledge seeker, like we asking knowledge from an expert, we become a knowledge contributor. And it is nothing but like a dedicated and a focused effort for about 1 week or 10 days. If you have 3 books that you learn, you get a kind of a very high level idea about the overall industry. And then if you start moving in the right circles and creating a kind of a knowledge ecosystem for yourself, you can really beat any kind of an expert in that field. And then you'll be in a position to at least debate and articulate. You may be wrong in your debate, but the debate shapes up your own understanding about the fintech industry. So broadly, I'll call this as omne trium perfectum. So anything is stated in 3 words. It stays in our mind. That's a kind of a phrase, omne trium perfectum. Everything said in 3s is always perfect, like roti, kapda, makan. The 3 words actually. Ram, Amar, Akbar, Anthony, for example, that stays in our mind if you say in 3 words. So what I have done in this presentation is basically, when I'm giving you the tips for becoming a fintech expert, the 3 words I wanted to use is you stay informed, you try to unlearn from the things, you try to understand what is the new happenings that are happening. You unveil the big picture, why fintech is not just a kind of a payment innovation, but is contributing to sustainable development. So this is basically staying informed, stay updated, not just informed, but also update. So don't take everything at a face value, have some skepticism. Everybody is saying fintech innovation is great, be skeptic. Like tomorrow, if something happens to this entire UPA thing, if there is a kind of a collapse happens, if there is a technology issue happens, if there is a war that gets broken out, what are the things that might happen and which are not like unreasonable assumptions to make, and scan the regulatory environment for these skeptic doubts that you are having. Are regulators doing something about it? So scan through the regulatory environment, have sensitivity to the people who are working on these things and try to contribute to their work, and then finally stay ahead. You innovate and you also have that innovation mindset, indulge in terms of knowledge seeking and influence by way of knowledge giving actually. So that becomes a kind of a mindset that will help you in terms of staying ahead of the curve in the fintech space. I think broadly, this is what I wanted to cover. I'll stop sharing here. Let me see about few questions. Presentation is informative. Can we receive the presentation? I think I will try to send it across. There is nothing copyright here. So I can send this across. So there is a complimentary appreciation. Thank you. You can start using this chat actually, so that we can use some time. Contact number, you can find me on LinkedIn, but otherwise, if you want to stay in touch, I stay in Hyderabad, and my email ID, I'm sharing my mobile number in case anybody wants to get in touch. I would love to hear from you on the books and knowledge that you want to get actually. So somebody is asking 3 book names to suggest. So my favorite book is I think The Future of Money, right? By Ishwar Prasad. Yeah, Future of Money by Ishwar Prasad. I don't know where it has gone. Yeah. And Paul Vigna, Michael Cafe. They wrote good books on blockchain and Bitcoin. Rashida, thank you. Yeah. So any more questions? I think if there are anything, I'm little I think I'm finished a bit early, but I thought I'd use this for spending time with you guys. If you have any other specific questions. Arunji, like, do we have ability to audience to speak out and ask anything? I'd be more than happy to share something if they raise their hand or something like that. We have some time.
No, sir. The mic permission has been disabled, sir. They can only chat, sir.
Okay, okay. Because I'm a little early actually, because I thought we can use some time for because these are all like one way. In Zoom, it becomes all the more one-way dialogue. We speak to the screen. So I thought if folks are interested, we can chat about these things.
Yes, sir. It cannot be edited, sir. Once the meeting has started, we cannot do anything, sir.
I know. So I'll wait for a few more minutes. If anyone has got any specific queries or anything, I'd be more than happy to answer them. I hope this is useful for you guys, and look forward to like learning actually. Anything you find out something different in understanding what you're doing. Karan, you want to say something, sir? I think I have covered almost all the questions. Arunji, I think I'm good. If anybody wants to ask anything further, it's fine. Otherwise, it's good. I can wrap up if you want to take over. One second, I think I have a few more questions. Yeah, to gain technical knowledge, books I have suggested. What's a thought in fintech regulation? Fintech regulation is one of the best in the world. You can see how they now in Singapore is getting integrated with India. This has been the world's first cross-border fintech payment initiative. RBI is already ahead of the curve. Please go through their website. In this section on fintech department. Yeah. And what are all your predictions about RBI and government coming on digital currency? There is no prediction, it is already there. It is already there. The CBDC, Central Bank DC, is already in pilot stage. And in a few years, they will launch commercial. There are certain technological issues to be sorted. Please go through RBI concept note on CBDC published in September. What about crypto to S2 regulation? I am little pessimistic here. Crypto is not live up to its promise as a medium of exchange. Folks might be skeptical to use it as store of value. If it continues, it could be volatile. Governance naturally concerned of permitting them as mainstream regulation is stringent. Once they come in future. So what is the third entry, sir? I want it to be a kind of homework. Your homework question. It's interesting to find out. Yes. Yes. So what your thought on fintech regulation I have done? Thank you, sir. It was an eye-opening session. What is the basic course that we can learn to change our career? See, learn, and learn. Learn. I recommend reading books more than courses. More than courses. I have suggested here right now. Keep this on LinkedIn page. The more you read BAS papers, the more you become knowledgeable. Keep watching the YouTube videos on the topic. Thank you, Narayanji. What will be the role of fintech companies vis-a-vis the digital currency? Same like currently, just like how fintechs have intermediated between banks and customers, they can also intermediate between central bank and citizens. What extent fintechs have forayed into insurance sector? This is a relatively new item, relatively new topic. Still studying this. Insurance is a push product. People don't want to take insurance on their home unless pushed by others. Unlike lending, Thanks for the nice clarification. Thank you. How fintech companies and payment companies can become profitable? Scale is the mantra. I'm stable. Thank you, sir. Thank you. Good. So all those people who are saying good session and all, thank you guys. And I think we have already answered most of the questions. You're able to see the questions answers, sir, Arunji? Arun? You're on mute if you're talking. Are you able to see the question answers? Hello?
Hello, sir. Sir.
Huh. Are you able to see the question?
Yes, sir. We can see the. Yes, sir. We can see the question and answers, sir.
Good, good. So I think we can wrap up now. We're almost like 6:40. So actually, I'll stop here, sir, unless somebody has something. Otherwise, we have got already covered the question and answers. We have got a nice session that is done. Thank you. Thank you, Ashish ji, and a couple of other people who have a good compliment to leave there. I'm very thankful to you all. Stay in touch, and I think it's a new topic. And most of the times, whenever I approach CA institutes to generally ask for an engagement in terms of a talk, normally I'll get a broad response saying that these may not excite our existing chartered accountants. They will be more interested in a budget-related speech or maybe the taxation. But the kind of participation that I have seen is really very good, and I'm happy to note that people are into about learning something which I always believe is interesting one. Thank you. Thank you. So Arunji, please take over, I think, with whatever the next topic that you want to do.
Thank you, sir.
Yeah.
Sir, on behalf of our Office of SIRC, we would like to thank you for your precious time and presence, sir.
Thank you.
Thank you very much, sir. Thank you.
Thank you, guys, and take care and all the best. Stay in touch, and good luck for your learning. All the best. Thank you. So I'll leave now. Yeah, thank you.